Okay, good morning, everybody. I'd like to welcome you all to the Daily Energy Markets podcast. It is Wednesday, October the 4th. I'm delighted to be joined by Ami Daniel, co-founder and CEO of Windward, Peter Maguire, CEO of XM Australia, and Richard Radolia, CEO of Matrix Global Holdings. Thanks so much, gentlemen, for joining us this morning here in the UAE, at least. Lots to get through over the next half an hour. Richard, I'm going to start with you, and let's talk a little bit about the news overnight in the US. I mean, not to get too, entrenched in domestic US politics, but more looking at that. Obviously, the removal of the House Speaker, the ousting of him, and what really that does, in your opinion, over the next 2-3 months. For economic sentiment, does it impact at all the U.S. economy? We've seen the U.S. economy doing fine so far this year, despite all the recessionary predictions earlier in the year. What's that going to do really for economic well-being and sentiment, more importantly?
I don't think anything. I think the House of Representatives in the Republican side of the party is split between kind of a moderate wing and a conservative wing, and the conservative wing is really up in arms about how legislation is passed and really the budgets are being pushed out. So what we're faced with right now in the current budget cycle is about a $2.2 trillion budget deficit in the current ruling. And so basically what this was the conservative side saying, we do not want to continue to pass these continuing resolutions to continue the government's ability to borrow and spend and borrow and spend. And that's really what it is. I think we'll come to some conclusion in the next week or two. This is one of maybe you've not heard this, but don't be surprised if you will hear this. Donald Trump could be appointed Speaker of the House. That is something that is being discussed. It's possible. It's part of the rules. They can do that if they'd like. That will be something that will bring something that will truly be news, but I don't expect that to happen. But that is something that is possible. You never could be really nothing's out of the realm of possibilities when it comes to the politics of this. So I don't expect anything. The government, the U.S., as you said, is moving along sharply. I think our problems are still very deeply entrenched. We have inflation; it's not going away. Energy is still on the tip of everybody's tongue. I live in California, which has the highest gasoline prices in the country, upwards of $6.50, almost $7 a gallon now, which is about $1.50 to $2 higher than everywhere else in the country. It has to do with regulations and taxes and a whole host of things that California puts on the consumer here, and so that's really a major point of concern for many. It's really the issue is one of inflation. Interest rates are high. The 10-year Treasury, I think, is now at 17-year high. There's really nothing stopping it. There's very little I think the Fed can do, but just to hold what they're doing, if not keep on rates taking rates higher. And I think that's really going to be the problem that we're faced with.
Okay, thanks, Richard. Peter, to you then. On that point, I wanted to ask you about, we have seen obviously those Treasury rate numbers being highlighted in the last 24, 48 hours. We haven't seen them at those rates since 2007, etc. Fed, meanwhile, has been saying it's going to hold where it's at through next year, more or less. I mean, what are we seeing now? I mean, does that put a bit of a dampener on where we've seen commodities and oil prices go? We're kind of turning a bit more cautious again. Where do you see that indication? Do you see a difference in sentiment in the last 2 weeks?
Well, good morning and greetings from Abu Dhabi. No, I don't necessarily. Richard and I spoke off air before the show started, and he was saying, we look back on what happened a year ago. We were on together, and in that time, you could probably nearly mirror image where we are today. And are we in for an uplift or an updraft to that 105, 110 sort of level? And what will that do to naturally yields with the dollar? The dollar's running at 107. Commodities have been fairly heavily sold off. If you look at, and let's look at gold first, 1840 an ounce. Copper's well down to 8,000 a metric ton. There's a lot of the base metals have been crushed, but one of the only commodities that's boomed to the upside has been energy, and that's been very evident over the last, say, 110 days. So it's been absolutely on fire, and maybe it's just taking a little bit of a breather at the moment. I'm in that camp, the 93, 94 sort of testing on Brent. It's back to that 90, 91 sort of handle at the moment. And it's just having a breather. It was exhausted, and I'm thinking it's probably just building up some steam again. I'm conscious as far as yields. Where does the Fed play? You know, I won't be surprised if you see a rate rise in November, but certainly early next year from the Fed, because I don't think inflation will be contained. Naturally, if you've got these high energy prices, I'm looking at the sort of numbers that you're experiencing in Japan. They're back. Put it this way, in the yen, and Richard was saying as far as how much it's costing in California, it's now more expensive in yen to buy a litre of petrol than it was or gasoline than it was in 2008. But we've got crude prices running at 90 versus 150. So that's where it just shows you that US dollar has just been extraordinary over the last couple of months. Our traders are rubbing their hands with glee. Everything's being punched down, but the US dollar is just reigning supreme.
Okay, and I mean, yesterday I was speaking to someone who was telling me it's now cheaper in California to charge your car by battery for the week than it is to pay for gasoline. So that's another little factoid. But Richard, Peter, just sticking with you on that sort of oil price number, 110. You said you were talking earlier about that. I mean, OPEC won't let it get to that, will they? Won't they be worried about demand destruction at that point and just step in again, reverse a couple of the cuts they've been doing? Will they let it get that far?
Well, I don't know. We're in the hands of, naturally, OPEC Plus. There's a JMMC meeting today. I want to see the rhetoric that comes out of that. You hear a lot. You listen to a lot. Just let's see what the words are, and then naturally you look at sentiment. And I think that might be another reason why the market's probably backed out a little bit. They're just waiting for that announcement today to see mood. And look, who knows? No one can forecast. But we're still running at around about 1 million barrels up for next year as far as consumption versus 23. So it's still growing, and it's just differing players all willing to put their hand in the till to get more of that value or more of that production to allow their own budgets to be in full capacity, because everyone's under the pump globally.
Okay, thanks for that, Peter. Ami, welcome again. Let's talk a little bit about what you're seeing on the water, if you like, in terms of indicators of strength for products, for oil, shipping, maritime sort of indicators there. We're seeing more Russian oil again go to India, where that had kind of dissipated a bit in August, but back to kind of normal. India speaking out. We have an article today on the Britain saying, anything about above $80 just makes us take more discounted Russian oil and look for alternatitions. So
First of all, good morning, everybody, and good morning from Tel Aviv today. So I think if we take a step back, I think there are a couple of angles here. One is the world economy. Actually, if you want to look at the world economy, you don't just look at oil, you also look at containerized goods shipments, which are actually the vast majority of imports. And I think that market has been crushed completely. So actually, if you look at the outlook for recession versus not, and you look at freight rates for containerized goods going, and the outlook for Maersk and Hapag-Lloyd and these boys, as well as the imports to the US, they're all vastly down. Inventory is up and shipments are down like big time. You're talking about 95, 97% down from last year. We're back to pre-pandemic, but actually, I'm not sure we're actually down to pre-pandemic, because at least on the containerized goods side, many of our customers, shippers, freight forwarders, report a significant drop in volumes. Okay, so I think that's one insight that's, I think, worth talking about. Secondly, and that has been actually introduced or discussed in the 45-day budget, which passed in the US without the Ukraine support. I think there's a bit of a weariness effect from the Ukraine-Russia thing. And I think actually it's a big driver. If you go back to the price cap and all that stuff, the goal was to quote unquote limit the Russian revenue stream while keeping oil flowing. I think we're seeing it just change the flows. We're seeing a record amount of oil going into LATAM. You're seeing shipments go through the Bering Straits. You're seeing actually more players delve into Russian shipments than you would have thought. I think we're seeing the last Q 52% rise in ships, in new vessels taking new not in the market, vessels taking for the first time Russian cargoes, 52%. That's a big deal. And I think the geopolitical weakness in the U.S. doesn't, I think, bode well for their capability to enforce actually this G7 action. And I would say the same on the US and the UK. So that's one angle. The second angle that you did have in one of the headlines there is actually the Philippine Sea or the South China Sea, whatever you want to call it. There's a bunch of clouds, and I think Peter mentioned Japan here. I think it's actually been boiling between Japan and the US and the Philippines, South China Sea. If you've been following the news, and I think people need to kind of choose their battles a bit. So for what we're seeing, Russian oil is not stopping to flow, it's just going other places. I think it's just kind of shuffling the cards a bit of imports and exports. It's going to keep on being heyday because of that for tanker owners, because the ton miles is going up the roof. Yeah. Because when you need to ship to LATAM, you're just shipping much more than if you're shipping to Europe, and that's not going away anytime soon. Whether the oil price will remain 100 or 105 or 95, who knows, right? It's more, it's more of mystery than a puzzle, I think, and nobody really knows where the price is going. But in terms of macroeconomics, the U.S. is strong, but still, I'm not sure completely that the world economy in terms of imports, exports, and so forth is really on its front foot, and I think it remains to be seen.
Yeah, and of course, China is one of the biggest exporters there, isn't it? Of those
has been hit big time. China, if you look at the China details, for 6 or 8 straight quarters, it's going down, actually because of nearshoring, because the U.S. Exporting from Mexico and moving manufacturing to Mexico up big time, I think 50 or 70%. So China consistently, because of these headwinds, have been slowing down, which probably means going to import less crude, because it's also been importing a lot of the last couple of years for the reservoirs and so forth. So I think it's a mixed bag. So if you ask me, people will be looking for local arb. So I think the more interesting conversation is where is the local arb in specific grades and specific types of trades and so forth, versus just where's the headline price going.
And versus traditional arbitrage flows as well. Thank you very much, Ami, for that comprehensive outlay. Richard, just back to you. I mean, let's back to the U.S. economy. I mean, it's been, sort of, I suppose, running along nicely this year, but we're getting very mixed indicators. I mean, obviously, we've had the rate increases. We've had, people saying there will be a shadow recession coming along. How much longer can things really continue to tick along nicely? But you do have you've got Janet Yellen saying she's very optimistic in our article about outlook for the U.S. economy. But others less so, really, sort of the man on the street, if you like. Give us an indication. And gasoline prices are going up. Nobody's controlling them. The US can't dip into its SPR to do anything about that, etc. So, surely that's going to hit soon. It's going to. And what about the whole debt repayment on the corporate side? I mean, when are we going to see that all come through?
I don't know, and I'm not sure I want to be around for it. I think it's going to be coming. What Yellen said there was going to be no inflation, so let's not sure what Janet Yellen's going to tell us about something about how things look. The debt situation is dire. It's very, very problematic, both on a corporate level, on a real estate level. We have serious problems on commercial real estate because people don't go to work anymore. I mean, literally, you have office buildings in San Francisco and others at 50% of the prices they were just 2 years ago. On a government level, you have interest rates go up. The interest on our debt is becoming significant. I mean, I think it's 650 billion heading towards 800 billion. The federal government only takes in 3.5 trillion. So it's a really, really big number. I mean, the issue here is the U.S. is probably the best of the bunch, but there still is the same problems. We have a significant amount of money. This Inflation Reduction Act is just something that we're going to continue to be, I think, is inflationary to the extreme. I'll read you a quote that's coming out. Panasonic is building a brand new battery factory, I think in Illinois, maybe, or Kentucky. They're going to have to let the coal plant that produces the power still to be there, because they're going to use more power in the new battery plant than is being used by the entire town or where the battery plant is being built. So we've got this mishmash of how is this transition going to go? How is it going to work? Is it inflationary? So I think you have something that's going to continue to be inflationary, where this money is going to be pushed in. Panasonic is going to receive $8 billion towards the building of their plant from the Inflation Reduction Act. So that just gives you a sense of where money is going. So it's very problematic on that regard. As it relates to energy, I think energy prices are going to stay high. I agree with Ami that I don't know where they're going to be. I do think that you guys at APEC learned something, and I think we all did, and it was said by the Saudi minister a while ago, and I think, and this is reading from the UAE energy minister saying, OPEC Plus never targets a certain oil price. When there was asked about the higher prices for the health of the global economy, he says, the price is right for the consumers, but right for the consumers for a very limited time only is short-sighted. Adding that investment in oil and gas needs to happen. I think this is the key factor. I think I said this last year when I was on with Peter, that the problems would start in mid-23 on price. They've started now. OPEC Plus is saying what they're going to do. They're going to do it. The problem is not now. The problem is now for the next 3 to 4 years. If investment does not come into the oil sector on an upstream basis, UAE and Saudi are telling us, you need to pull your own weight. We cannot do this alone. And I think that is what we're faced with. That to me is the largest problem. That's the elephant in the room that no one is, we talk about it, but I think we talk about it in this kind of offhanded way about how is the transition going to go. I think the bigger problem is going to be how is investment in upstream energy going to go, and what's the effect going to be on the populace of the entire world?
Yeah, that's certainly what Saudi and UAE are saying, that they're investing billions in transitionary technologies, etc., and initiatives, but they do want to keep that prime. They're not setting the price, but they have said very clearly recently that we need about $90 to be able to continue to make these investments in long-term or 10-year at least oil and gas security. Peter, just back to you. Let's talk a bit about gas, LNG in particular. Just to give us a picture of the Australian picture right now in terms of LNG. There's been a bit of movement there in terms of certain capacities not maybe coming to the fore in the near future. Certain people have been relying on Australian LNG, looking elsewhere. And just an outlook for gas prices in general for the fourth quarter for Asia. Any worries there in terms of winter coming?
Well, Australia contributes about 21% of global demand or production, and I think Qatar's running at 20%, and US is 19%. So those three players make up just shy of 2/3 of global production. We had some issues going back to about the 7th of September with Chevron as far as industrial issues and union strikes, which didn't really materialize to a big issue, Diala. And the other side of that, and that's now 3.5 to 4 weeks away, 4 weeks ago, and it's a very remote part of WA, Western Australia, the largest state in the world. It's an enormous area, and it's. I don't think we've got any issues as far as production. The issues are as far as price and how that's going to move forward. But will it get swept up with high energy prices? Does a rising tide lift all boats? And if we, as we've spoken, if we see $110 or $120 barrels of oil, I'm sure that gas prices will go up fairly strongly as well. And that's going to be, I think, good for producers, not necessarily for consumers, and what impact that has naturally to the wrecking ball of as far as US dollar against other currencies. And do we see, at what point demand destruction take the market by storm, or does it weather that? And you're looking at, subsidies from governments all over the world to try and comfort voters and, of course, consumers.
Once again, exactly. Big votes, big elections in the US, and big election in India next year. I'm going to go to you. Just, if you want to comment on that, and then I want to ask you about Iranian oil flows as well.
Sure. So a quick comment. I think it's interesting, and hasn't been mentioned here, to see how does the issues at BP actually influence transition strategy. I think Bernard Looney was a big supporter of, and they have a big kind of vision of net zero and transition to that. They sold the business to INEOS, like the chemical business to refinery chemical business to INEOS. And they've done a lot of moves around that. And I think big oil has a big role, obviously, and the Exxon board was also, I think, under scrutiny for that. In the strategy of transition, I think we're hearing less about that. So I think that's really interesting, and that will probably go in tandem with the rig count, because at the end of the day, big oil are the ones who are, building most of the rigs, especially in the Gulf of Mexico. It's expensive. So I think that hasn't been mentioned. I think it's an important mention. I think also the head of BP US is transitioning out of the business, and that's the major kind of investment in shale oil and Mexico and all that. That's under him. So I think that's an important comment. I don't know how that obviously will unfold.
Yeah, there has been a turnaround in the approach by those big IOCs coming out and saying, well, we're still for the transition, but now we're going back into big oil, if you like.
Yeah, and I think BP has kind of led that charge for a while, at least verbally, and in terms of thesis of the transition. That had made a lot of investment with Equinor and stuff like that, and in North Sea with offshore wind. I think these are all things we will see play out. So that is, I think, one comment. In terms of Iranian oil, I think it comes back to geopolitics. My view is it's pretty stable. I think it has been stable for a while now. I think they've first of all, they've been exporting quite a lot. Okay.
Yeah, more. So, they've been exporting more, right?
Yeah, I don't know if it's like in the grand scheme of things, it moves the needle, right? Like, who knows if it's really 1.8 million barrels a day, 1.5 or 1.4. It's really hard to know. I got to say, I don't know unless you're really trading in that ARB, specifically in that ARB. I'm not sure that really matters. How much Russia is really exporting now and every day, and how much is putting kind of offshore on vessels for 3 or 4 months and then exporting it out, and Russian oil is flowing to Saudi. It's all kind of a big puzzle that's moving. I don't see Iranian oil stopping to be exported. I think actually the drivers are China's and India's appetite more than anything, and the arb between Iranian oil to the Russian oil price, and I would say even de facto oil price, and not the oil price, obviously, of Russia. I can't tell you how much of the sanctions are being enforced. I do think, and I think we've written about that extensively, that all this dark fleet practice is extremely dangerous, because the size of the prize is too big. You can make $100 million, maybe $80 million, right, on one trade of 1 million barrels of oil. Whatever, $40 million. It's a lot of money, right? It's tens of millions. So the appetite is very high. That means you have 52% more vessels involved in that trade, and these people don't have like proper insurance, like Indian insurance. And I have a lot of respect for India, but it hasn't been tried and tested on the world stage ever, right? And this is not ousting of a Speaker of the House. This is what happens if there is a big oil spill coming out. Who's going to cover that? So the more people in the quote unquote dark fleet involved, the less insurance, the less maintenance, the less proper safety tests you have, the longer the time, the bigger these ships go without maintenance. That is kind of, I think, a big thing, because the ships are also sailing more because of the ton miles. So I think we should all kind of talk a bit about that. And I would really caution people who are trading with oil to see kind of their counterparts. It's all nice and well until that one time something happens. Just look at the Deepwater Horizon.
Yeah.
Look at the Exxon Valdez. It's things people don't forget forever.
Yeah, absolutely. There's our question for the day. Will US domestic politics wobble and the bearish treasury rates silence those $100 oil bulls? Yes or no? So, is that negative sentiment from political side of the US, and also the outlook for inflation, etc., is that going to have a dampener on $100 oil or no? We'll see what comes back with that. Richard, just back to you on oil. We talked about Iran. Let's talk a bit about Venezuelan oil as well. And just in terms of, so the US kind of, the sanctions are all still in place, but it's kind of softening its stance, letting a bit of oil flow here on the east in Iran, and down in Venezuela, of course, officially renewing the Chevron contract, etc. But But is that a signal of we just want as much oil on the water as possible, or does it have bigger things to worry about, like China?
What it really is just it shows you the complete lack of understanding of the energy markets. How can the federal government allow Venezuelan oil to be produced and they won't increase the leases for crude in the U.S. Gulf Coast? In California, Gavin Newsom wants to put a large tax on San Joaquin oil producers at the same time, which stops the flow of oil in San Joaquin Valley. And where do they get the oil from? The Ecuadorian jungle. So, this idea of government having anything that's logical, we can't go there because it's illogical. We talked about what Venezuela is going to do. They're going to increase. I think they're highest number in a while now because the U.S. went down and said, Chevron, go ahead. You can go back down there and get some oil out of the ground. That's all going to be well and good. But as far as the U.S. government and its policies, you cannot find logic in it. How can you do that? We have the Keystone Pipeline. Now, instead of coming down the Keystone Pipeline to the most sophisticated refiners in the world, the Trans Mountain Pipeline now is going to go from Calgary through the San Juan Islands. And you just said it. It's all going to be well and good until a ship goes on Bainbridge Island in Seattle or something. Something awful in the beautiful islands off the coast of Canada. So. There is no logic here. There's nothing to say this makes sense. I think the problem we face is continuing. We can talk about price back and forth. Here we are a year later and the price is the same. I think this has to do with a much larger story, which is lack of investment in the upstream energy business is going to cause problems. We've never seen this in all of our years, and we've been in this business for decades. We've never not seen significant oil supply responses that come out 2 to 4 years later after prices reach an economic level where private capital could take advantage of it for a high rate of return. We're there now. But what's happening is the government is deciding that that's not going to allow that capital to happen. It's going to subsidize to the tune of billions, $1 trillion in the Inflation Reduction Act, and therein lies the problem.
Well, maybe they will change their mind or will start to allow that because
I think what happens is people get taken out of office. In different parts of the world, I think people will get taken out of office. I just saw the German PMI. It's 43%. It's contracting. It's buying natural gas at a price 4 times, 3 to 4 times higher at a price that built the biggest European economy in the world. That's where the problem is going to be. And I think what will happen is people will get the vote. They will vote. And that's what we're going to find out what will happen next.
Germany is certainly having its challenges, but Oktoberfest was very successful, I hear, and that went on okay. People spending a lot of money on beer. Peter, let's go to you to close up for us and have a little bit look at the sort of outlook for the US dollar, obviously running very strong right now. A lot of people calling that, medium term, it's going to start to weaken. When is that finally going to happen? And is that just dependent on what happens with rates in the US? Obviously, that's holding it up. And also just give us a little bit of an outlook for other commodities. What are they doing? Gold, etc. Outlook for the fourth quarter. We see our survey result there a bit tight, 50%, 56% say no, that's not going to stop the bulls. So that bullishness continuing according to our viewers anyway. So Peter.
Yeah, exactly right. I think that as the energy prices continue to trend higher, that's going to take dollar up even further. So that's going to be a powerhouse behind it. It'll just be a very, very strong US dollar, I think, certainly leading into Christmas in early 24. Very hard to forecast much further out than, say, 3 months. But that's how we look rolling into Christmas. The second part of it is where does as far as Fed, what does policy do? You've only got to see how many central bankers around the world are now starting to say that it'll have to be higher for longer. As Richard said earlier about Janet Yellen and the talk as far as inflation, invariably they get it wrong. So let's just see where we are again. That move to the upside. Do we see demand destruction entering that that framework across the world for higher energy prices, maybe not. And I think that it's going to be a incredible time over the next matter of months to be, from a trading perspective for that US dollar. I won't be surprised to take a 108 or 109 out. Pretty hard to, maybe a 110 by Christmas. It just seems to have a trajectory all of its own. And that's going to be incredible what it does as far as intervention for the yen, and other currencies are really starting to be felt. You know, we've probably got a 50 handle in front of us for the Aussie dollar. We're now at 63. So possibly close to 62, high 62s very, very shortly. So yeah, it's going to be game on for currency traders, and certainly for commodity, and watch out for equities.
Yeah, and also, you know, obviously, even more impact of higher energy prices for those consumers who are buying in different currencies. So perhaps more of an impact on demand there as time goes on. Thank you so much, Ami Daniel, Peter McGuire, and Richard Radolia for joining us this morning. Yep. We have that halftime talk feature interview coming up in the next hour, so do tune in for that. That's by Fujairah Terminals, the Abu Dhabi Ports Group. Of course, a lot of port action. You might be interested in hearing what he has to say. You know, talking about essentially infrastructure expansion of ports in the region, and also sustainability going hand in hand with that. So that's coming up in the next hour. Thanks everyone for joining us. Have a great day. Bye.
Thank you, guys.
Thank you.
Bye.
Thanks everybody.
See you.
Bye-bye.
Bye.